You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, it's time.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 17th day of January, 2020. Thanks so much for joining us. Whoever you are, wherever you are, well, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. And that also gives you access to the chat box so that you can become a part of the conversation. Of course, you can also find us streaming live at youtube.com/CFRN/live. Also, twitter.com/CFRN. And of course, on the CFRN Facebook page. Modern technology. Isn't she grand? All right. Well, folks, apologize for my absence these last few days. This flu bug that's out and about, it's a pretty tough one. So, you know, I want to say try to avoid it if you can, but that's kind of a meaningless comment. But there, I said it. So whatever you can do. Yeah, I've never been a big proponent of the flu shots and that kind of thing, and I'm not saying that I'm changing my school of thought on that, but it's certainly an option. And as someone was so kind enough to point out, that as a man of a certain age, well, maybe I should think about it a little more than I have in the past. So anyway, I have lots of unanswered messages. I know that many of you have been praying for a speedy return to health. And God's on the job. He's working on it. So let's get this show underway. And I want to extend a special thanks to Michael and to Valerie for standing in the gap and just for being here, when I couldn't. So, surrounding yourself with good people, quality people, the best of the best, no matter what you're doing, what field of endeavor, that should be at the very top of your list. And I'm certainly thankful for the God-inspired choices that I made, or that He made for me. Okay. All right. I'm going to jump straight to the numbers. If I can get my platform to cooperate here. Here we go. All right. How my data platform changed. All right. Let's do it. S&P. These are the cash markets. The S&P is currently up a little over 7 points, 7.5. NASDAQ up 7.5. The Dow up 41. And for some reason, not showing me my data on the Russell. That's okay. We'll take a look at a chart here in a bit. We got the S&P, you got the NASDAQ, got the Dow. Why would they take the Russell out of the list? Hasn't been that long. I'm sure there's still a Russell. Okay, in the commodity basket, crude oil, I'm showing unchanged. And gold up $7.30. And I see what they did. All right, currently the Russell's down a little over 1 point. We may be, I'll get into this later, but we may be seeing a change here midday. Speaking of the Russell, within 2% of the August 2018 record high. And often the Russell will show up as a leader to either the upside or the downside. Not something you can set your clock or your calendar on, but something to always keep an eye on. All right, in the Asian markets, at the close, Nikkei posted a gain of 108 points. Shanghai posted a gain of 1.5. And the Hang Seng gained 173. In the European markets, at the close, the FTSE was up 64. The DAX was up 96. The CAC was up 62. That makes for a green day in Asia, green day in the UK, and with the exception of the Russell, and again, we're talking at this point less than a point negative. We've got a mixed day here in the US of A. So off we go to Michael for a recap of what happened this morning in the live training room. I've spoken with John, and he will be joining us at the bottom of the hour. And of course, we'll take a look at, I did get out a few alerts last night, both Concierge and Logic, so we'll cover those. And of course, we're headed into a long weekend, which I'm okay with. So, Michael, I'm going to pass it off to you.
All right. Okay. I
And
hope you're feeling better.
thank you,
Get
sir.
some rest this weekend.
Yeah.
And
Well, that's one thing I've had is plenty of rest. I couldn't do much else, but so I did get some rest. But yeah, thank you very much. And I've got your charts up.
I'm knocking on wood over here. I haven't had that illness in a very, very long time.
Amen.
There was one time, I don't know if you remember, a few years back, my kids' school was closed for a week because over 10% of the kids in the school had it. Yeah, both of my kids had it. Yeah.
Ah, that's almost I don't know what the percentage is for an epidemic, but that sounds like it'd be pretty close.
Yeah. Yeah, they had to shut down the school and disinfect the whole thing.
Wow.
Yeah.
All right.
All right.
Well, here you go. It's all yours.
Stop thinking about it.
Yeah. All right. It's all yours, and I'll be here when you're done.
Okay. Here we go. Here it is. Okay. Good afternoon, everyone. Today is Friday, the 17th day of January, 2020. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial apply.cfrn.net. If you click on that, let's see, do I have it open here? I do not. If you click on that, you'll be brought to this page where all we ask for is your name, your email, and your phone number. And you can tell us the biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and then you'll be sent a confirmation link. Now, you must click on that confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. So you got to click on that confirmation link, all right? Now, let's go back here, and we'll open up another one of these. Right, Emini Training School. Okay, good. All right, so a recap. We ended up having a yellow day today. The trading was really slow, so this recap is going to be pretty quick. We only had 6 trades, but if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 17th day of January, 2020. We lost 6 ticks in crude. We made 4 ticks in gold and 2 ticks on the ES. Put us at plus $5. Woohoo! But got us positive. That's what I was looking for. So it would be a yellow day, not a red day. We took a total of 6 trades this morning. On the month now, we're up $1,158. That's over 10 days, averaging $115 a day. And on the year, we're up $1,158 over 10 days, averaging $115 a day. That's because it's January. All that information will be more significant, next month and as the months roll on. All right, let's see. All right, I'll just get into the trades. What we didn't do. Now, we missed this really nice gold trade right here. We missed this one. Would have been a break even. We missed this one. Would have been a nice profit. We grabbed a break even on this and plus 4 right there. Now, during the break, there wasn't all that much opportunity today, really. During the break, there was a momentum long trade from right here. You grabbed a little bit of profit in there, and that was it on the gold. Now on the euro, we only had 1 trade opportunity here on the euro. It was right there, and that totally flattened out afterward. On crude oil, we started out with a stop out here on crude, right? Yeah, started out with a stop out here on crude. Then we picked up 2 ticks here to put us at -6, and we had a break even there. We missed a shorting opportunity over here, and that was pretty much it. Well, I guess we missed a shorting opportunity right here too that we could have picked up a few ticks on, gotten a little more into the green. During the break, there was a long trade from right here, but I don't think I would have done it. But it was a long trade from right there. It would have worked out if you did do it, but I don't think I would have. The ES, at the end of the session right here, we picked up 2 ticks on this, and that was just to get us positive on the day. All during the morning session, there was just nothing to be done here. with the ES. It was a mess. Now, if you go and look at the higher time frame, like I was doing yesterday, you can see right in here, it was back and forth over the BBC and into and out of the weekly trading zone. And it was like that all morning. And I had a feeling it was going to be messy, you know, when I saw that that was going on. And I pointed that out to everybody this morning. But yeah, that was it for this Friday. It's like holiday trading. So today, again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 17th day of January, 2020. We lost 6 ticks on crude. We made 4 ticks on gold, and we made 2 ticks on the ES. Put us at +5 on the morning session. Took a total of 6 trade opportunities. On the month now, we're at $1,158. That's over 10 days, averaging $115 per day. Now that is one contract, 2 hours per day, and you know, missing a bunch of trades because, well, I'm replying to Ninja Trader for various things. On a year now, we're at 1,158 over 10 days, averaging 115 per day. Now, that'll be more significant next month when we get into the new month. Then this number will be different from this number. Okay. Okay. So, if you have not taken a free trial with us, go to the home page at CFRN.net. And over here in the right-hand column, all you have to do is click on apply.cfrn.net, and that will bring you to this page, eminitrainingschool.com. You can go directly to this page if you want to. You know, you should go Google it a whole bunch of times. It'll help our Google ranking. But all we ask for is your name, your email, and your phone number, and you can tell us the biggest trading challenge, so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that confirmation link, we don't know that you took the free trial, so you got to click on that link. All right? All right. And that is it for today. Yeah, that's it for the morning session. So if you guys have any questions about anything, you can email support@cfrn.net. That's support@cfrn.net. Okay, or you can call 949-423-6464. Okay, that's 949-423-6464. And that's it, guys. With that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready, you can have it back. Guessing Dwayne is not ready. Okay. Okay. Joan says, welcome back. And then she left.
Oh, well, that was nice. Okay. Okay.
All right.
All right, that's a start. Recap of the recap.
Today, I had a yellow day today. I didn't get the gold for the day. We ended +$5. 6 trades.
That's the truth about trading.
It is. It is. I was just happy to get yellow because it was going to be a red day until that last ES trade. And I pulled that off and I got 2 ticks. And
if you weren't working against a 2-hour shot clock, I have every reason to believe that it would have become
a green day.
Better than yellow.
Yeah. You know, I missed a couple of trades, and one of them was a nice gold trade that would have just made the whole day. And I was, you know, I'm going back and forth with Ninja Trader because they want all this stuff done today. And some of the things that they want done are things that they told me to undo before. And so
can you fire me a copy off of the latest missive, and anything that can be done from my end, I'll get it done.
Yeah, well, Valerie's working on it too. So,
all right.
You know, the latest thing that I have right here is this. I'll just forward it over to you.
Okay. All right. As soon as it shows over, have a quick chat with John as soon as he pops in, and then I'll take care of that. Okay. So let's get a chart up. That's a good place to start. Okie doke. All right, here's the S&P 30-minute chart. We are at the highest weekly trading zone for the S&P. Now we started to show a little bit of weakness here and here. When we first hit the zone on the overnight session, well, we actually touched it here shortly after the London Open, and just been kind of consolidating there. Of course, we pull back to the BBC, it held. It was starting to look like it might not, but all candles are touching, and so here we continue with this unprecedented, historic bull market. The thing I think at this point to watch for, with the S&P being our leading indicator, and not to mean that it's the first one to move, you know, on an up move or a down move, but the one that generally, you know, all the others eventually follow it, even if begrudgingly. What we haven't seen is just a straight parabolic move. And when that happens, that's when I think we're going to see, you know, some serious profit taking and or selling come into the market. Now, we started charting this move back 2 weeks ago, I think it was, or close. Now, I may have already asked you this. We're markets closed Monday, right? I take that as a yes. Okay. So from this low to this high to this retracement low, we consolidated between the 50 and the 62% Fibonacci extension. These are extensions, not retracements. Now, a 100% Fibonacci extension takes us up to 3372, and that looks to be, you know, the next milepost marker up ahead. Now, if we were to come in strong, say Sunday night, then we have the holiday Monday, and then we open Monday night for Globex, and then we have full session, of course, Tuesday and the rest of the week. That would be, it's about 50 points overhead. That may signal the beginning of a substantial retracement. Now, on this leg right here, the one that we used to do this, you know, Fibonacci extension, if we use just the typical Fibonacci retracements, going from that low to that high, there's John. Then what we hit was a 38% Fibonacci retracement from this low to this high. All right, so let me get John's mic open.
He's not in here yet.
Oh, I just rang my phone.
Nope, not yet.
All right, let me check and see if he's having. He usually jingles me after he gets in. I'm wondering if he's having difficulties logging in. And guys, we're going to chat with John, but we will also go over the Concierge Trade Alerts and the Logic 247 from last night. All right. Okay, I see you just got logged in. All right, I'm going to open up your mic. Hey, John, welcome to the show.
Hello there. How you doing?
Well, better than I have been. Thank you for asking.
Yeah, hope you get better real quick.
Thank you.
Sorry to hear.
Yeah, thanks to
your plight.
you,
Yeah.
Michael,
If you,
Valerie, all of you for holding the fort down and staying strong. Appreciate that.
If you want to get some alpha lipoic acid, it's a kind of a it's kind of like vitamin C. It's a, what do you call those things that the vitamins in general just helps, can help shorten the thing. Also, about those, I guess it's too late to use those kind of flu vaccines, and there's another thing called Xfluenza, something like that, X something.
Not familiar with
some
that
new treatments. Yeah, they can actually they can shorten, but you have to use them right away.
Oh, I saw a commercial that says, if you catch it within the first, after the first symptoms show up, that it can.
Yeah.
I saw a commercial on that. I think I know what you're talking about.
Yeah. Just to give you kind of a recap of what I said yesterday. Look, the market is potentially very vulnerable right now, based on what's happened today so far. We've gone negative on the mid-cap Russell TNA early in the day. We almost went negative on general indices, but we've rallied since. But the market is acting pretty weak today. It sort of feels more like a sell rally type of day rather than buy the dip. Although we had a rally off this last dip, and
we did, and we're holding at our highest weekly trading zone for this week, 25/26.
Yeah, the thing is, last week we kind of called it down. We had a down Friday after a strong week, and we had an up move on gold. This week we're kind of in the same place. We've had another strong week. The market came back pretty strong, even though Friday was quite a sharp sell-off. The question is, are we going to be able to do that again this weekend? And that is actually, and remember, we got this holiday on Monday,
right?
So we got a lot of things can happen in the world between now and Tuesday, especially in the overseas markets. Now, one of the things that's kind of encouraging today is the world markets are surging. They're Chinese, Brazil, Russia, everybody's on fire, and Wall Street is not as strong as the world markets. The world markets kind of taken over the leadership, which is something to recognize, if you like, or be aware of. Now, we've got a 4-day week next week, and this is a little secret. The first few days of past January the 20th, which would be the 21st through the 25th, I guess, are actually seasonally very strong, almost 100% of the time. And there's a few times a year when things are very strong. The Bastille Day, around the early July, we've talked about that before. I actually mentioned it yesterday because the transports have been, the mid cap has gone to a new all-time high.
What is Bastille Day again? What is that?
That's July the 14th. So the first 2 weeks of July, often very bullish. After December the 12th, we already saw that, how bullish it was. And this period, late January, I don't know why it's so bullish, but it is. Maybe, and look, it could be super bullish because, right away today, when you look at Apple and you look at the phenomenal performance, Facebook, all making new highs, you have to ask yourself, why? Why are these strong? And my feeling is they're probably going to report blowout numbers. And I actually talked to a guy today who is long Apple, pretty heavily, and he's pretty bullish on them. I mean, he said somebody came out with $1,000 price target on Apple. Which
Apple
is,
has a market cap now higher than the entire Australian stock exchange.
Oh yeah, I know, the Australian country almost. The economy. It's 1.3 trillion or 1.3 or 4 trillion, which is the same size as Russia, if you think about it. And by the way, if you look at the, you should look at the Russian chart. I mean, boy, this thing was like a 2 trillion plus economy back in 2014, and I mean, it got cut in half. Now it's recovering, but it's got a long way to go back up. So, the reason, as we talked about this before, I think the embedded card in the Apple iPhone is a really, really big deal. And that's one of the reasons why the stock is going so well. Because they could be getting a major disruptor to the financial industry and the banking industry and stuff. Become another kind of a credit card company, like MasterCard or Visa. So it's pretty significant. And there may be other things going on that we don't even know about yet. Like, they may be coming out with a better TV than anybody can dream about, and things like that. So there may be some surprises. I think, my feeling about Google, I said, when it was kind of in the dumps a few months ago, and they came out with this supercomputer thing, 10,000, do 10,000 years of calculations in 3 seconds or something. That is something, when a company is surprising on the upside, you have to keep buying it. As you know, I told you about an associate of ours who financed a company called NVR in the early 90s and put $1 million into a bankrupt company. And when it came out of bankruptcy, he got $1 million shares, in exchange for the million, I guess. The stock started going up, and it went from $10 to $50, and it went through all the drama of the real estate boom and everything, and the sell-off in the early 2000s. It actually kept going higher in the early 2000s because it was a real estate company. And really the smart thing to be doing with that company, just the same as, if you bought Apple at $4 back in the early 2000s and you'd been buying more all the way up, you'd be super, super wealthy today.
Yes.
NVR hit 38. As a matter of fact, I haven't looked at NVR recently, but last time I looked, it was $3,800 a share. And it's actually 3,900 today. How about that? That's amazing. This is the way to play the game. And when you are going to try and be a Buffett, I'm going to talk about Ann Scheiber next week when we have some time. She's a little old lady who used to work for the tax department, and she noticed that people who own stocks were the richest people that she interacted with. So she started following stocks from her kind of 1-bedroom apartment, sort of in the early 30s. And she was so mean, like so sort of frugal, that she didn't even want to buy the Wall Street Journal. She's go to the library and read the Wall Street Journal assiduously every day. And she got $5,000 from the tax department when she retired. She put it all into stocks, and she died in 1992, I think, and left $22 million.
Wow.
To a university or something, or to a alma mater or something like that. So, and by the way, if she still had those stocks today, she'd be north of 100 million easily. Maybe even more than that.
And what was her game plan? What was her strategy?
Well, I guess she kind of like Warren Buffett. She it's like Jamie Morgan, you know, when he was interviewed there not so long ago. Jamie Dimon, so JP Morgan.
Right.
He basically said, you know, we've been through wars, we've been all kinds of drama, but the businesses that are growing, you know, whether it's McDonald's or Colgate or Nike, you know, these mega industries, you'd have to keep buying the dips, you know, and the really buying the dips and taking advantage of these sell-offs when they happen is really the formula for greatness, for wealth. Just in the same way as on this show, we called the bottom on December 26th last year. Not in 18, and sorry, not in 19, but in 18, and we had all of 19 upside, and we're still going up today. That was a fantastic buying opportunity. It
really was.
And yeah,
and it came on the heels of the worst December since 1932.
Exactly. So, you know, when there really is blood in the streets and things are and you know that and remember that fear greed indicator literally was virtually at zero, which has never been seen before. You just have to go in and buy when that happens. And incredible year, one of the best. I mean, the best year in history, really. And so here we are. We're at 29. You know, we talked about this a few thousand ago. We were getting, you know, the magical pull of the 30,000 number is really, you know, starting to manifest itself. We're up 63 today. We're 29,303 right now, and on the actual, on the index, we're 29,350. So we've only got 650 to go to get through 30,000. And
that's how we look on a 30-minute chart of the Dow right now.
Yeah, and listen, before the market rallied yesterday afternoon pretty strongly, I kind of laid this out for everybody. You know, I actually said we could run up to 33,000, maybe even 34,000 in a very, very dramatic couple of months ahead. And why would that happen? Because, you know, it's the deals they signed this last week, or this last few days, the USMCA and the China combined, you know, if you kind of add them together, it's sort of like a $500 billion, you know, deal almost for the US. Because there's probably a lot of things not factored in, and it's a little bit like the tax cut, right? We talked about this on the show. You know, I went back and looked at the tax cut, how it acted in 1985 through 6 through 7, and they signed the tax cut in the fall of 86, and you know, 87 was like a massive up year before it took a hit. So, but in this round, you know, we signed the tax cut in late 17, and then we had a couple of good months. You know, we had a couple of blowout months, and then late January of 2018, bang, we have the beginning of a correction. So I think the signing of these two, you know, because of the way the markets reacted to the China deal and the US and the Mexican deal, and has continued higher, is pretty freaking bullish, you know. I mean, it's really remarkable, and so there could be a lot of follow-on. Just like we had, you know, we had a couple of months, 2.5 months or so, from the tax cut through to the top. So this would take us maybe into March. But I do believe we're going to run into problems maybe in the second quarter. You know, Steve Bannon was on a few days ago with Kyle Bass, and you got to listen. That's a must-listen to interview on CNBC. And he was on again with Trish Regan last night, and you got to listen to it, because this guy's really got his finger on the pulse. And it's not a walk in the park for Trump by any means. While it looks good, you know, a lot of things could go wrong, and he's very worried about Bloomberg either becoming, you know, Bloomberg could become a third-party candidate. That could torpedo the market. Every single election year, there's a there's an unexpected sell-off that nobody sees coming, and there's no particular time of the year when it happens. You know, it's happened in August in the past. You know, it's happened in July or June. It's happened in April, and it's happened in you know, in January in 2016. You know, literally the first day of the month. So, but it tends to happen. It is virtually 100% certain it's going to happen. You know, if we run up to 33,000 or 34,000, I think we'd easily drop 3,000 points, come back and test 30,000, and then we could rally again into the election, theoretically. And I've come up with a possible different take on that. That if we you know, if Trump does win in a landslide and the market goes up 1,000 or 2,000 points, it might overshoot, and it could actually, you know, reverse in the opposite way of the last election, where it went down and came up.
Right.
And if we do have a kind of a spike top, that might be a primary top, right? And then we could potentially rally in the first quarter of 21, and that might be a secondary top. And then it might be all over after that because of the curse of 21. So now that's kind of the market story. You know, I think if the market breaks today, we probably, you know, with the strong seasonal.
It
coming
kind of
in
looked
next
like it
week.
was going to break, and now it's firmed up, and
Yeah, with the seasonals coming in next week, the odds are still pretty high that we're going to skate through this, especially if we close higher today. If we close down, I think you got to be a little bit careful. You might have to take a little bit of insurance. But the gold, so that's kind of the story on the market. Now, the big news on gold is that Ray Dalio of Bridgewater Associates, the biggest hedge fund in the world, these are the, you know, the beyond the elephant in the room. They're huge. They're 165 billion under management, something like that. He's personally worth about 35 billion. And I've never seen, I don't believe I've ever seen Bridgewater come out with a very bullish forecast on gold, something they've kind of just haven't done in the past. And they're really, you know, setting something in motion that could be very, very big. You know, in the same way as this woman who put this, you know, $1,000 or $4,000 price tag on a Tesla is certainly responsible for this recent rally up to 500. And, you know, somebody putting an outrageous price on Apple is probably a good reason why the Apple's rallying too. So when a really big, you know, look, Susquehanna, which is an analytical house, a brokerage house, you know, kind of thing, they came out with an upgrade on Western Digital in early December, and also Micron. And these are two very important leading indicators of the economy. And I was kind of watching them, and I took my eye off the ball, and next thing you know, they started running. It took a while for them to kind of respond to the upgrade, a few days. But once they ran, they drove the whole market higher. And that's part of the reason why we're still going higher, because these are, you know, that upgrade really was a very big deal. And with the other, you know, with all the other things, you know, with the Fed, probably going to be some blowout earnings, are all contributing to what we're seeing, you know, where you can't believe the way these stocks are jumping higher and indices are jumping higher every day. So I believe this call on gold for 2,000 fairly quickly is very significant. It has got people focused, and I think a lot of funds are ready to jump on the gold thing as soon as it happens. But it doesn't guarantee that it's going to go today, tomorrow, or even next week. It might take a while to get going, but I think the odds of it going are pretty high. And so, and look, there could be a correction first, because it's sometimes when people come out and say outrageous things, they don't always happen right away. But you've got to be thinking about $2,000 gold every single day now. You got to put it.
it's coming. It's coming, for sure.
And for all of this